Good evening, good afternoon, good morning, depending on where you are in this world. This is Hejin Lee with an evening update for Bitcoin. So tonight I'm going to use the Bitfinex price feed. I'm mad at Coinbase. Made a bunch of deposits and they're not even showing. When you go to their ticket support, and they'll say, we're really busy. We'll get to it in a few days. Thank you very much. All right. That's not the reason why I'm not using Coinbase. I just want to stay consistent with Bitfinex for now. So here's a very nice channel. And let's zoom in to see what's going on. We had said if this is ABC, and I suspected that's a little too quick, but then started counting 1, 2, 3, 4, 5. So let's get rid of these labels for now and see if we can redo it. From what I can see, I had wanted, and you'll see this quite often as well, what you want is not what the market wants. I had wanted to see the price go breach this. But I'm not surprised that this upper trend line repelled the price. Pierced it here, came right back in. Now, is there a possibility that this correction that started is not done yet? Yes, it's possible. But I always say possible is always different from probable. So if we go based on ABC is done, and then we count an impulse for a trend change, I think that works for me. So we have 1, 2, 3, A, B, C, D, E, 4, 1, 2, 3, 4, 5. So I believe we may have 5 waves. The reason why an impulse confirms that you have a trend change is because of this. If you have a zigzag, which is 5, 3, 5, B wave has A, B, C, 3 waves. A, B, C. Now, whether this is a zigzag or a flat, 3, 3, 5, what is consistent between the two is that B is consistently 3 waves. And let's say in this case here, we have A, B, C. And if A, B, C is done, like here, A, B, C, then we can expect here at the end of C an impulse. That makes sense, right? Now, if you're saying ABC is done, and you get a 5 waves up, that's confirming that the ABC is done. Let me tell you why. If you didn't get a 5 waves up, but the 3 ABC, and you didn't have any of this, then what you would be expecting will be the possibility that these ABC is a greater A, subwaves to a higher level A, this ABC will be B, and then you'll get a C down here, let's say. So if this is A, white B, white C, then B can only have 3 waves. But here in this case, the fact that we have 1, 2, 3, 4, 5 waves negates the possibility of this being a B wave. Therefore, it in many ways, this 1, 2, 3, 4, 5 confirms that this ABC correction is done, or should be done. I hope that makes sense to you. I hope that was clear enough. All right, so if this is 1, 2, 3, 4, and 5, then what's going on here? What was this all about today? Well, let me ask you the question. I mean, Elliott wave states after 5 waves, 1, 2, 3, 4, 5 waves, what do you get? You get a requisite ABC correction. A, B, C. So let's take this model, 1, 2, 3, 4, 5, ABC. We have 1, 2, 3, 4, 5. If we have 5 waves, what do you get? You have to get an ABC correction. What do we have here? I think we have A, B, C. I hope that makes sense. This here, 1, 2, 3, 4, 5, ABC, is following this model, 1, 2, 3, 4, 5, ABC, which is the basic tenet of Elliott waves. 5 up, 3 retrace. Now, can this whole thing morph into a different kind of more complex correction? Absolutely. Remember, a correction has 36 possible combinations. And that means you have 2.7% chance of getting your corrective count right. The odds are very stacked against you. That is why during a correction, I kind of stand aside. Or at least try to find the terminal end of an ABC to enter to buy more. But I don't go hop in and out, in and out of this. That is insanity. That kind of day trading is the best way to make $1 million in less than 6 months, only if you start with $2 million. It's better to follow the trend, trade the trend. Now we can also say A, B, C. Sure. It can touch the trend line. Absolutely. That'll still be well within the guidelines. Why? The rule between the rule between wave 1 and 2 and what I mean by 1 and 2 is these 5 waves are subwaves to a higher degree wave 1. And this ABC could be higher subwaves to a higher degree wave 2. And if that's therefore 1 and 2, the rule between 1 and 2 is that the 2 cannot equal or be below the start of 1. So you can even reach 89, 95, 98%. And if it touches the lower trend line, look, let's draw some horizontals. This horizontal support matches and crosses exactly at that point. What could be another landing zone? Here's another zone of support. Even if prices came down here, it'll still be well within the rule. So this is what I mean by awareness. Having enough proficiency to be aware of the direction of pathway will keep you from getting surprised. Will keep you from getting panicking. Another zone of horizontal support is here, I would say, right here. Notice how this wave came right to this, close to this support here, right here. Okay. So if it breaks through this, I think it'll land it to here. But I think it'll most likely go to here. Okay. Now if I do a fib retracement, this support line is pretty close to the 0.78. This white line is darn close to the 0.618. This support line is in the middle of between 0.5 and 0.36. And so the fact that this pretty much matched pretty well is not an accident. You don't always have to draw Fibonacci lines. You can draw horizontal support resistance lines and still be pretty close to well within Fibonacci zones. And the reason is because the past prices were formed as a reflection of sentiment. And both in that process, when that price was being formed, Fibonacci had an underlining role. So when you draw your support and resistance lines, you are drawing the imprints of the effects of Fibonacci ratio. And that's why when you do a retracement of Fibonacci retracement chart, lines come pretty close to it. Here's a precision hit to 0.78, 0.618, in between the 3.8 and 0.5. And that's not an accident. That's only because past prices were formed with an underlying impact and effect of Fibonacci ratios. And as a result, by drawing horizontal lines, you will invariably hit certain Fibonacci lines. So this here will be 681 retracement. This will be 78. Not 618, not 681.78. So let's see what the overnight price action does. Now that you are aware of this, if it does go track this way, will you be surprised? I don't think so. When you are better aware, awareness is the key to keeping you from panicking. People are afraid of the future because they are not aware as to what will happen. But I think with regards to chart pattern analysis and technical analysis of price, which is a reflection of sentiment, and since the ebbs and flows of that go according to 5 waves up and 3 waves down, and with the heavy underlying effects of Fibonacci, it gives you a way to peek around the corner because you're really getting all the price probable pathways. You're getting all the awareness of them. And when you're aware of all of the probable pathways, you don't become surprised anymore. So some were probably getting nervous, I know. I saw some comments. But you really want to get and embark into becoming solo, self-proficient analyst, being able to count your own Elliott waves. Some will give up easily and say, this is too hard, I can't do it. That does happen. There's a young man whose aptitude is phenomenal, I think, who's been taking some coaching. Some will get this very quickly without even coaching. It all depends. And for those who don't get this, they have to find another way that'll match whatever background, personality, aptitude, requirements that they would desire to better match it. So here, is one scenario, and this scenario is my alternate. And I wouldn't be surprised if it actually came out to be so. Alternate is still a pretty good close probable event, price pathway wise. But regardless, let's see what happens, and I'll talk to you in the morning. Good night.